We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is founder and publisher of the Uranium Insider newsletter, Justin Huhn. How are you today, Justin?
Doing really well, Tom. How about yourself?
Excellent. Great to have you back. And of course, it's a really exciting time for the uranium sector. So why don't we start by kind of delving into obviously the biggest thing making waves in uranium right now, and that's Sprott coming into the physical uranium market with the SPUT vehicle. So explain to us a little bit about how that works and the news around it, please.
Sure. It's definitely probably the biggest development that's hit this sector since I've been following it in 2016, and I'd arguably for longer than that. The uranium sector, as we've discussed on a couple of previous interviews, and I'm sure you're very familiar with, is ripe for a fundamental commodities run this decade due to the importance of nuclear power and the supply deficit that is existing currently and is looming out towards the end of the decade. The growth of the sector, it's growing 1% to 3% per year. It's an overall very fundamentally sound investment thesis for, let's say, a midterm investment, the 3 to 5 year kind of period. And so that was kind of the setup before the news that Sprott would be taking over Uranium Participation Corporation. They announced that in April. And we immediately knew that that was a really, really big deal based on not only the potential of the Uranium Participation Corporation entity and its ability to buy physical pounds, which it has done since its inception in 2005. But because of who Sprott is and the organization that they are and what they've done, they have $18 billion in assets under management, $13 billion in their physical trusts, which is the physical gold, silver, platinum, palladium trust, and now uranium. So they're an absolute monster in the resource space. And we were extremely excited to hear about them taking over that fund, turning it into a trust. And when we understood the implications more deeply as far as how they were going to organize it, what their plan was, and their stated and unstated intentions, then that really solidified our conviction for this trade. And we've been pounding the table since then, especially on the pullbacks that we had in July and August. July 19th and 30 days later, August 19th, was kind of a higher low. Sentiment got really, really hit. Everybody expected, the market is going to front run the Sprott ATM going live. The fuel buyers and nuclear fuel traders would front run Sprott. None of that really happened. So there was a lot of doubt amongst the investing community during that time. But we didn't doubt for a second. It was 100% full steam ahead. This is the time to add if you're not already in. And I'm glad that we did that. We had a lot of new members that added pretty heavily on those pullbacks. So they're really happy now. But essentially, the Sprott Physical Uranium Trust, affectionately known as SPUT, is their intention is to buy uranium whenever they're at a slight premium to NAV. So the net asset value of the actual physical uranium that they hold, they charge a 1% fee on every transaction. So as soon as they're north of a 1% premium to NAV, they issue shares into the market through their ATM. For your listeners that aren't familiar, ATM stands for at the market. It's a financing vehicle that allows them to issue shares at will into the open market. So when there's a lot of volume trading in the stock, or it's not technically a stock, it's a trust. So in the vehicle, let's say, they can issue shares. Their goal is to not go north of, let's say, 50 or 60% of any given day's volume. So today, the last I checked, this was about half an hour ago. Today is Tuesday, the 7th. They had already, U.UN, which is SPUT's Canadian ticker, they'd already traded, I think it was 1.5 million shares in the first 2 hours. And over 1 million of those shares went through House One, which we've recognized as the broker that's selling the ATM shares into the market. So they've already raised probably north of another $10 million today. They're sitting on $15 million in cash as of the open today. So in the course of 3 weeks, they've purchased almost 5 million pounds of uranium. They've moved the market up from, it was $32 when their ATM went live. It was 3 weeks ago today, actually. $32 when it went live. It's now over $40 as of this morning.
That's
so the price of uranium, that's the spot price of uranium. The term price is yet to pick up. So we actually have that, that quote unquote golden cross of spot ticking above term, at least for now, until some visible trades get done and some long-term contracts get done that they can set in the books for the nuclear fuel brokers and the reporters. So UXC and Trade Tech, they can actually report a rising term price, but we've yet to see that confirmed. So for now, spot is above term for the first time since the previous bull market. And I think when it first breached term, it was 2006, if I recall correctly. So it's really unique time. And obviously, since spot has run up 20+% over the matter of weeks, the utility or the equities are just on fire. We're seeing stocks up 30% in a matter of, last week we saw a couple of stocks go up 30%. Cameco, one of the larger cap stocks in the space, companies everybody is familiar with in the uranium space, booked an almost 20% gain on the week. And I did a little research. It was the largest weekly gain that stock has ever done in the history of its trading. So we're seeing a lot of really interesting moves, a lot of money start to come back into the sector. And the first couple of weeks of this recovery, there wasn't a lot of funds flowing into the ETFs, strangely enough. So we actually think that was kind of some smart money positioning, possibly some institutional money buying individual companies on the open market. But last week we started to see some funds flow into the ETFs, started to see them issue some new shares, and they're going to be buying, this week and next week based on that funds flow into the ETFs, be buying their underlying holdings, which whenever that happens, it's just this, we call it the flywheel effect in our newsletter. It's just a snowballing effect. Money comes into the ETFs buy the equities, and the sentiment rises on that. And then all this money flowing into SPUT, and they're buying physical pounds, that's raising the spot price. It's just all this swirling flywheel of positivity in the sector. And it's happening right now. And it's super exciting to see.
Yeah, sentiment and momentum together coming in really, as you say, accelerates that flywheel effect, right?
For sure. Yeah. And so a lot of the equities now are a little bit on the overbought, looking overbought on the daily charts. Mm-hmm. If you look at the MACD or the RSI, we're starting to get into pretty overbought territory. But man, now the ETFs are buying. We have spot just continuously driving up. I mean, who knows how much they'll be able to buy today. There was only one day in the past 3 weeks they didn't buy anything. And that wasn't because the funds weren't flowing. They just stacked the cash and bought more the following day. They bought almost 1.5 million pounds on Friday alone. So based on the amount of cash that came in today and the amount that we think that they're raising today through the ATM, if the pounds are there and they are able to get a deal done, then they'll probably buy another, north of 1 million pounds today alone. It's just wild. I mean, we're talking about at this rate, which I don't think this rate is going to continue, not because of lack of funds flow into SPUT, but probably because of availability of pounds. Because right now we have, about 1.5 million pounds of primary production come into the spot market every month. And they bought that in one day. So there's a lot of questions about how this is going to play out, but it's clear that they know what they're doing. It's clear that they set up, and it's not like they're out there as sharks, just absolutely going after things, trying to cause some detrimental action to the nuclear utilities. They literally just set up the fund. It's like, well, if money flows into this, we have to buy uranium. That's how this works. And technically that's how it worked for UPC, but they didn't do the ATM. And so their prospectus was to buy pounds when they were at a significant premium to NAV. We're talking, 15, 20% plus for a long enough time for them to go out into the market, issue a private placement, issue shares, raise the cash, and then go buy uranium. And they did that a number of times and it worked well enough, but clearly Sprott saw the opportunity in changing the way that this vehicle could work and cornered it. They spent almost 3 years getting this deal done. So we think they know what they're doing. We think they're very, very intelligent, very, very astute. market players. And clear that we're seeing that already, how it's playing out in just a matter of weeks. It's awesome.
Absolutely. So Justin, maybe for our listeners that aren't as familiar with the uranium market, give us some perspective on how big these numbers are. You said that there was just over 1 million pounds of production per month, but worldwide, how many pounds are there produced per year at this point, and how much is, just remind us of how much Sprott is buying right now?
Worldwide this year, there's expected to be about 125 to 130 million pounds produced. And we have 20 to 25 million in secondary supply. So let's call it 150 to 160 million pounds of total supply. And there's 180 million pounds of demand. So even with secondary supply, there's a 20 to 25, even greater supply deficit this year. The demand, like I said, is 180 million pounds. To put it in perspective, the United States is the largest consumer of uranium. They have the largest nuclear fleet still at this point. China is catching up to them, but it's going to be a number of years before they surpass the nuclear demand in the United States. That's 20% of the grid, 19% of the grid in the States. And the United States consumes almost 50 million pounds of uranium per year. So at this rate, if SPUT were to continue at this rate of purchasing, they would be buying more uranium than the entire U.S. nuclear fleet on an annual basis. Like I said, I don't think that the volumes of pounds will continue, not only because of the rising price, obviously. So the amount of money they raise is going to be able to buy fewer and fewer pounds as we go if the price continues to rise, and I believe it will. But they also will probably have to buy farther out on the curve. So far, they've had 30-day or less settlement in all of their purchases, which is why we're seeing the price move so much. They're literally forcing price discovery in terms of what is above ground and available for sale for fast delivery or fast settlement, because there actually isn't delivery. They're purchasing at any of the 3 primary conversion facilities where uranium is stored. So they're not demanding that it's all being shipped to one location, like Cameco did, because they actually physically needed the pounds. So last summer, the price spike that we saw in the summer was due to primarily location arbitrage and pounds being shipped to Port Hope for Cameco. So we saw a 10+% premium in the price for that delivery location, but there's no location premium currently because of the way that they're purchasing. But at some point, we believe that this type of purchasing volume is going to entirely clear out what's just sitting above ground and available for sale. So they're probably going to have to buy a little bit farther out on the curve. That will likely, typically buying farther out on the curve brings you higher prices. If you want to secure pounds in 2025, you're going to have to pay $39 a pound for it in a term contract, which is actually less than spot now. But last week it wasn't. So the fact that they might have to get, delivery or settlement in 3 to 6 months could bring the price down a little bit, but it's the consistency of demand is really what's unique here, that we have a constant buyer in the spot market, and it's likely to continue to put upward pressure on the price.
And do you have the numbers handy for how many pounds they've actually bought already in the 3 weeks since it's the fund's inception?
I believe it's 4.9 million pounds.
Okay.
Yeah.
So,
yeah,
Justin, what ends up being let's say the ultimate goal here for the fund? Is it to sell it back at higher prices? Is it to negotiate term contracts with utilities? How does that work once, let's say, they achieve the price that they want for uranium?
They're not really looking to achieve a certain price goal. Mm-hmm. The fund, the stated purpose of the fund is to grow the AUM of the fund. That's really the stated purpose of it. Obviously, we can infer a number of different purposes. Sprott has pretty decent exposure with the uranium equities. They've done a number of private placements over the years, a number of bought deals. They're investors. Sprott is also a asset manager, a capital manager. So their investors also are highly exposed to uranium equities. To the extent that this vehicle has upward pressure on the price, it obviously helps their underlying holdings and their customers' underlying holdings. So we can infer those goals as well. But as far as they don't have a goal to reach a certain price of uranium, different than their silver and gold trust, where they actually have physical redemptions. So if you own, I don't remember, I don't have offhand the minimum ownership in terms of dollar value or in terms of units held of the physical silver or gold trust. You can actually take physical delivery of metal. Clearly, they're not going to ship a can of yellow cake to you for you to store in your garage if you're a big investor. So there are no redemptions for this vehicle, and they have not stated what sort of market conditions would dictate them to sell back into the market. So their answer, if you ask them, their answer is, we're not going to sell. That's what they're telling you. They're not going to sell physical pounds back into the market. Does that make sense to somebody just thinking about, oh, well, they're stacking the boat at $30, $40, $50 a pound. If we run up to 150, you're telling me they're not going to sell it back into the market. That's what they're telling us. When this thing turns, and eventually it will, it's possible they'll sell back into the market. That's just me guessing because it makes mathematical sense. Mm-hmm. They're stating their purpose is to buy and hold physical uranium and grow the AUM of the fund. They want to create an extremely liquid vehicle that will attract large investments. That's really what they want to do.
Interesting. So, Justin, let's talk a little bit about let's say the transparency and the difficulty that the uranium market kind of poses and why it's such a hard market to analyze. And talk to us a little bit about how the way that Sprott communicates, basically how transparent they are in what their goals and what they're actually stacking, how that's a complete, let's say, breath of fresh air for the uranium market.
I'll answer the second question first. The transparency is fantastic. So if you go to Sprott's website, to the Sprott Physical Uranium Trust page, they update on a daily basis. In fact, I think it's at 4 p.m. Pacific time, 7 p.m. Eastern. On a daily basis, they update how the NAV has changed, how many pounds they purchased, what their cash balance is, their total assets under management daily. And it's really well done. They've established a solid presence on Twitter. And now you have the entire uranium Twitter sphere following the Sprott Asset Management Twitter page that's updating on a daily basis how much they purchase. So it's a huge breath of fresh air, especially when compared to UPC, when back in January, February, the market, when they were trading at a 20% premium for multiple weeks. I think it was more than a month. And the market was like, hey guys, what gives? You're not buying any uranium. Yellow Cake just bought. All of these other companies, non-producing companies, buying the open market, and they were not. So the communication with customers and with the investing community is fantastic. As far as what makes this market difficult to analyze and to understand, it's a very, very complex market in terms of the nuclear fuel cycle. It's pretty simple on paper, just A, B, C, D, the way that things work, but it's difficult to grasp as an investor how slowly things move in the nuclear fuel market. So pounds out of the ground into fabricated fuel into a reactor is minimum 18 months. And it's usually longer than that. And it depends on how it's mined. I suppose in some cases, it could be a little faster with ISR mining. The Kazakhstans, the Russians, they mine ISR and they have their own conversion facilities and enrichment facilities and fuel fabrication. So that process happens faster there, but still it's very inelastic in that when there's demand, you can't just snap your fingers and fill that demand. It takes a long time. And even, a lot of investors are worried about Kazakhstan ramping up their production because they're the largest producer and they grew their production very, very fast in the first decade of the century, and into the last decade, in the previous decade. And part of that was because they were entirely state-owned, and there was a huge arbitrage in terms of the strength of the tenge, or the weakness of the tenge, I should say. So they were able to ramp production pretty significantly, sell in US dollars, and make a killing. Now that they're partially publicly owned, and we understand their process a bit more, and they've been very, very transparent, at least relative to how they were before, They IPO'd in 2018. Even if they ramp up their well field development now, like let's say right now in September, it would be late 2022 to early 2023 before there's any significant production coming from those wells. And an ISR well, at least for the Kazakhstanis, peaks at about 18 to 24 months from the time that they drill those wells, and then it drops off significantly from there. So it's, that's just one element of the largest producer, how it's difficult. It's like, well, they're just going to ramp up when the demand is there. It's like, well, they've already committed out through 2023 to not ramp up production. So let's say they start drilling wells like going gangbusters in 2024. Are you really worried about their ramped production hitting the market in 2026 when Sprott is ramping the price of uranium by $1 a day? No, we're probably going to be out of this investment by then. And as far as how to analyze the companies, what makes it really difficult is that most of these companies will never produce a single dollar from, mining something out of the ground. Some of them will. There's a number of developers that we're invested in that we've recommended to our subscribers that we believe will get into production in this market. And so we've, over the years, come up with a process to find what we feel are the best investments in the space. And that has to do with jurisdiction, that has to do with management, that has to do with the free float of the stock, that has to do with the share structure, that has to do with management's G&A, that has to do with primarily what it has to do with is whether or not a company will have significant catalysts in this market that could move the price of the stock, even if the uranium price didn't move. And now that it is moving, it's like it's a doubling effect, because now we've chosen these companies that are moving forward forthrightly. And now that the uranium price is moving, they're on fire. So we've come up with this process. We run every company through, and we've made the choice to go with the 10 positions that we recommended. But it's notoriously difficult to analyze just because it's not like a company producing a retail product that their sales go up and their sales go down, and you can make some sort of discounted cash flow analysis. And it's just practically impossible to do in this sector. So you have to take in these other factors, these sort of incalculable factors. The story of the company, I think is greatly underrated. How well they tell the story, how recognized are they in the market? How many investors know about this company? The moves that they plan to make that you can't read about on their investor presentation from the website, all of these sort of things. But yeah, it's, if you just come into the market with an ETF, you're going to do just fine. I think there's a great ETF called URNM, and they've grown massively over the past 12 months. Past 18 months, let's say. They IPO'd in January of last year. I don't have their assets under management off the top of my head. I believe it's pushing 500 million. They IPO'd at 3. Great ETF. So far, our portfolio, though, as we have picked what we feel are the best stocks, has outperformed URA by 3.5x in the same time period. So if you're pointed with your analysis and can dig up those good companies, you can definitely outperform the sector. But there's nothing wrong with the ETFs. They're highly liquid. If you're a larger investor, they're not a bad option. And you'll get exposure to the sector with far less risk, but you won't get the most upside.
Right. And we were talking before we hit record here, how the valuations of these companies really don't make sense on the low side. And they also don't have to make sense necessarily on the high side once we really get into the legs of this bull market, right?
It's true. And there's a couple of metrics that you can look at. You can look at individual companies and say, all right, here's this company. They're an explorer. They will likely never produce anything in this market. And they've got a $350 million market cap. Where's the upside? Mm-hmm. Then you can also say, okay, well, the entire uranium sector is at what, 34 billion market cap, something like that, 35 billion at this point. Mm-hmm. That's for the entire publicly traded sector for an unbelievably important industry. That doesn't make sense. So, and like you said, on the low side of things, these companies were worth next to nothing when they had huge potential to actually produce something of value. So things tend to swing, valuations tend to swing to the extremes on both ends. And I did an interview, I don't remember who it was with, about 6 months ago, and he was asking a similar question that was like, how do you analyze these companies? And, I've tried to do like a discounted cash flow analysis of these companies, expecting that they're going to produce, and they're already trading at their expected NAV. And I was like, if you go into an investment in this sector based on that kind of analysis, you're going to miss huge, huge moves. And we've seen that since the period of time of that interview, because it was like, okay, you're not going to buy this stock because it's already trading at its expected NAV as a producer, and it's years away from being a producer. What the heck? Mm-hmm. Well, you just missed 50% move since then. And the valuations aren't going to make sense. And if that is something that's going to keep you up at night, then it might not be the investment for you. But if you want to jump on the train of a highly speculative fervor that's likely to go crazy for about 2 to 3 years, I think that this is going to be a really, really fantastic move. And you also have to take into effect, a number of these companies are going to forge ahead and get listed on the New York Stock Exchange, which opens them up to the Robinhood crowd, the Wall Street Bets crowd. And that's not an investment thesis for us, but they already went out. They went after Denison in February. They drove it up, 100% in the course of a week. And so it's very likely they'll go after something else. They might even go after SPUT, knowing that it's physically leads to pounds being bought if they have the intelligence to position themselves in the other equities first, in addition to SPUT, which I'm not sure if they will or not. But there's speculative money that that in the terms of tens, if not hundreds of billions of dollars, that is looking at this sector, that does not care about PE, doesn't care about NAV, doesn't care about market cap, doesn't care about any of these things. It's all about fund flow. It's all about momentum. And that's really the times that we're in. It's the flow of funds is the story. And we're in the very, very early stages of flow of funds into this sector. I expect we'll see multiple hundreds of billions in market cap. And we should see new companies starting to pop up any day now too.
So exactly as you just kind of touched on, that there's another piece of this story that's important to highlight, is that at this time, the SPUT fund isn't listed on the New York Stock Exchange, right?
Correct. It's listed on the TSX.
So what are the considerations around when it gets listed on the New York Stock Exchange?
Well, I would change the when to an if, but I do think it's a pretty strong if. I think that's probably in the 90th percentile that they get it done. I don't think they would have gone after this opportunity if they didn't feel confident they could make it happen. They've listed multiple trusts already on the New York Stock Exchange, so it's likely they get this done. But we do expect that they'll see pushback from the utilities. I think it'll be pretty strong pushback because their bottom lines are being affected by what's happening right now. And to be fair, they've had forever and a day to incentivize care and maintenance mines to come back. All of the utilities that are likely going to be the ones complaining about the rapidly rising price being pushed by financial players very well could have signed long-term contracts with Cameco or Kazatomprom or Orono or Uranium One, 2025 to 2030 in the $40, $50 range. Could have done that any day in the past 3 years, but they haven't. So I don't know how well their argument will stand up, but they will fight it. And we're confident it'll happen, but it's not something we're betting on. And clearly, based on what we're seeing in the past few weeks, I think it's less important than most people think it is, just by the effect they're already having. Clearly, the fact that they have a US dollar-based ticker on the TSX was very, very smart. So now you have US investors that can access the TSX without having to deal with arbitrage between the currency valuations. Mm-hmm. So I think that assuming they do get the New York Stock Exchange listing, like I said, that opens them up to a market that's 13 times the size of the TSX and the Robinhooders and the Wall Street Bets, and just it's just such a much bigger, much more highly liquid market that I know they want to get that done. So they're going to make that effort. I don't think they've applied for that yet, but I think that once they do, they expect it to be like a 6 to 9 month process. They think it's going to take longer because it's kind of a new, even though they have other trusts, it's a new type of trust. I don't remember exactly why that is, but John Ciampaglia, the CEO, shared with us he expects that type of time frame. Normally, it would take 4 to 6 months for a New York Stock Exchange listing, and they expect it to take longer. So we think it's a Q2 2022 story. But clearly, the ATM was the event. That was the event. And so Larry McDonald from Bear Traps Report actually had that quote a few months back. He's like, yeah, they're going to chase, or they're going to seek a New York Stock Exchange listing, but the ATM that's coming in August is the event. And he nailed it.
So, Justin, when do we see utility buyers come back into the market to re-sign their supply contracts? Does this really light a fire under them as well? And why do they tend to move as a herd? Is this just their sentiment moving together to try and front run this price rise?
As far as I know, the majority of the volume, if not all of the volume in the spot market in the past 3 weeks, has been from Sprott. So I don't think there's much front running going. I think that there's possibly some traders trying to also buy, knowing how quickly the price is moving up. It's a great question because it's a head scratcher even for people that have studied the sector for a really long time, like myself. The fuel buyers, they move as a herd because there isn't really an incentive for them to try to game the market. There isn't an incentive for them. Like, they don't get any kickback from their managers, let's say. If they purchase uranium last year at $30 a pound and next year it's $40 a pound, they don't really get an attaboy. They don't get a raise. There's no, and they take a risk by buying before they technically need to buy. So the U.S. utilities, for example, are sitting on average about two years of inventory. And that sounds like a lot, but based on what I was mentioning with the length of time it takes for mined uranium to turn into fabricated fuel, it's about that time frame. So 2 years is basically tomorrow. Some of those utilities have fuel secured out into the future. Many of them don't. So they basically have, there's a gentleman named Kevin Bambro who's pretty active on Twitter now. He's, I believe, the co-founder of Sprott, and I think he was the main manager of Sprott in the 2000s. He really, really did well with the previous uranium bull market. He's retired now. He's not affiliated with Sprott any longer. But he was posting this morning on Twitter about how the utilities, they've got a mark on their calendar of when they need to buy uranium. It's not that they're not keeping up with the market in the same way that investors are, let's say. They obviously know the market better than investors do when it comes to what is out there in terms of UF6 inventories, the time scale it takes from UF6 to be turned into EUP, into fabricated fuel. What they've done a lot in the past few years is they've bought UF6 and EUP, enriched uranium product, instead of U3O8 because they can get to them faster. There's one less step in the chain. But really, there's just no incentive for them to act out of premonition. It doesn't make sense for them. Even if they look at the World Nuclear Association fuel report from 2 years ago and see this giant, like, alligator jaws of supply and demand, none of them went rushing to their desks and said, okay, we got to secure fuel now. We got to go and pay Cameco $45 a pound to secure that fuel, because until maybe now or soon, they've been able to go out and buy fuel from, or buy U3O8 or UF6 from carry traders. These are traders that have taken advantage of an abundance of above ground liquid inventory that came from an oversupply from the previous decade. And they knew it was out there and they knew how available it was. And so they would sign a 2, 3, 4 year carry trade contract with the utility saying, I'm going to go ahead and deliver your fuel. I'm going to add a little bit for my time and my energy. I'm going to add a little bit for the cost of the borrow, for the cost of capital to make this happen. And they've been able to do that. It's been a fantastic deal for the utilities. It's really, actually, in hindsight, has been a positive thing for the sector, in my opinion, even though it kept prices down and kept utilities away from signing term contracts with entities like Cameco. It cleared out the mobile inventory. So, and carry traders made that happen and made it more easily accessible to the utilities. So why would you, as a utility fuel buyer with absolutely no incentive to do so, voluntarily sign a contract with Cameco for $45 a pound when you can buy from the Kazakhs 3 years out for $34? When you can buy, fuel through a carry trade for $35 out 3 years out, 4 years out. There's been no reason to move. And there's been not a lot of warning from the consultants as well. Trade Tech has been pounding the table a bit more. UXC, without quoting them directly, because I'm not allowed to, they put out a piece a couple of months ago, said just kind of vaguely the rise of secondary demand and sort of expecting that Sprott would be doing what they're doing. I don't think they expected this type of volume and this type of price movement so fast. So considering that utilities, traditional contracts for utilities, term contracts, will be partially referenced to the spot price, it's highly likely that they will be moving faster to sign term contracts based on the demand that they're seeing in the spot market and the price action that they're seeing. So that type of information really filters out slowly. We hear from that, we hear about that with Cameco's quarterly conference calls. They'll say, we signed X amount of pounds in term contracts. We hear whispers here and there, but a lot of them are done just kind of, what's the word? They're done not above ground. There's NDAs that are signed and the terms of the contracts are not made public, especially when they happen. So that's kind of a black box, but we'll see it when the price reporting. If we see the term price reporting at the end of September jump up $5 to try to catch up with spot, then we know that's not just the price being dragged up by spot. That's actually term contracts being signed at higher prices. So that's what we'll be watching for. But we don't know how it's going to play out. We just don't know. I think that the contracts that are going to be signed by utilities are going to have some type of clauses in them, or a smaller percentage reference to the spot price, or possibly even fixed price contracts, because this is just happening too fast. Myself, if I were a fuel buyer, I just wouldn't voluntarily pay, a term contract for 2025 to 2030 delivery that's 60% reference to the spot price. It's like, no, I would rather sign a fixed price contract in the 50s and 60s with Paladin or with Boss or with Cameco or with a couple of other developers that are coming up, or care and maintenance mines. So we'll just have to see how that goes. In the meantime, the investing community is watching the spot price and it's on fire. So regardless of how the utilities come back, in what volume they come back and what exactly that looks like, the setup here based on the spot price movement and the equities reaction to it is exactly what we're on board for.
So, Justin, one other thing I'd like to talk to you about here is, in the gold and silver junior mining space, we talk a lot about the M&A potential in some of these smaller developers. So, how do you look at this idea in the uranium space, and is M&A picking up and also a great sign of things to come?
It is, yeah, it is picking up. It was just announced this morning. Encore Energy is buying Azarga. And Azarga Uranium has two primary development projects, ISR projects. One's called Gas Hills in Wyoming. Another one's Dewey Burdock in South Dakota. They're both really high quality ISR projects, and Encore has stated they want to be the primary ISR producer in the States, and it seems like they're going after it. So that's probably the biggest M&A deal in the space in 5 years plus. That's a really good sign. It shows you that intelligent managers are being aggressive about seeking out good projects and consolidating in the sector. We've seen a couple of other smaller projects. We've seen the JCU deal with UEX and DNN and Denison that happened a couple months back. That was another smaller M&A, but significant nonetheless. A couple of significant assets there and strong players in the space. And we expect for it to continue. There's a number of companies that are sitting on assets that don't really have great balance sheets and don't really have a clear plan on what they're going to do to move towards development. They're just kind of like, okay, we're a uranium company. We have XYZ asset. We proved it out 10 years ago, and we're just sitting and waiting for the price to move. Those are companies that will likely be taken out by more aggressive players. So we should see more of that action in the space for sure.
Excellent, Justin. Well, it looks like there's just nothing but positives from here on out. Obviously, there's some questions that need to be answered about how it will play out, but it seems like all of the momentum and news is into a positive direction here, right?
It is, yeah, it really is, and I'm so glad to see the sentiment swing. And anytime you have fundamentals that are just unbelievably stellar, but for whatever reason, sentiment is in the toilet, man, that's a buying opportunity. So now that we're flying, I mean, we're expecting to see, some kind of pullback along the way. Of course, it always happens, even when you've never been more certain of staying invested. And we don't like to trade around these stocks just because they move so violently. It's very, very difficult to time. We're kind of buy on weakness and hold for the time being. We haven't sold at all, with an exception of trading out positions. But the sentiment is definitely night and day from what it was 3 weeks ago, night and day, and looking really good for now. Yeah.
Excellent, Justin. Of course, you put a lot of info out on Twitter at Uranium Insider. And of course, your newsletter is available at uraniuminsider.com. Anywhere else you'd like to point to?
No, I don't think so. Other than if you're watching this and you're not on Twitter, I strongly suggest it. It's not a platform I love for every single reason, but it's a fantastic investing community, and the information shared and the connections you can make on there in the uranium space in particular. But regardless of what you're invested in, it's a thriving investment tool. I strongly recommend. And just if you follow me on there, I often will retweet and engage in dialogue with a number of really, really astute people in the space. So get on there if you're not already there, because there's great information being shared. And if anybody has any questions about our letter and you're watching this and you're not already a subscriber, feel free to reach out. Happy to send you a sample newsletter and answer any questions you might have.
Absolutely. I couldn't agree more, Justin. It's you can really curate a very custom news feed to what you want to see, and not have to deal with all of the other negative stuff going on in the world if that's only what you want to pay attention to, right?
It's true. And I think I haven't done this yet, but I think you can actually block certain words. So you can go on Twitter and you can follow hashtag uranium, and you can block hashtag COVID or whatever, and just, you can really curate it. And what I do is I have notifications set for about 10 people on there that I want to see every word that they say. Mm-hmm. And it's just so good. I'm so grateful for it. Yeah,
absolutely. Justin, thanks so much for your time today. Really appreciate it.
My pleasure. Yeah. Thanks for having me, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.